Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you with our monthly stock market analysis for November 2019, as well as the first week of December 2019. Pretty aggressive movements of the U.S. stock markets over the last few weeks, and we've hit all-time highs again, which is coming in roughly about the 25th or 26th time this year on continued optimism with our U.S.-China negotiations, positive GDP data, and overall economic employment data over the last few weeks have fueled a very continuous and very strong bullish rally. We'll start off this review as our monthly charts, and we'll start off with the S&P 500 ETF. And you can see here very strong movement in this past month in regards to price, but also a very large breakout of a multi-month consolidation. So we anticipate a continued movement in an upward direction to kind of balance out the momentum as we close out the calendar year of 2019. Now, at the same time, we have seen some very aggressive movements of the bulls and the shorts or the bears coming in and getting pretty much pummeled, quite frankly, over the last few months in anticipation that the rally will continue to fall as we go back and forth with our U.S.-China trade negotiations and some economic data that did not come out pretty well. But we still have very consistent movement. If we go back towards the beginning of 2018, we can see a very strong support line after we've broken out from resistance over the last few weeks or so. And as we look at the weekly, we'll see this even more detail on just how many weeks in a row we've had some very bullish action. Now, we do anticipate this to kind of continue on toward the latter part of this month with the possibility of some type of measured move target where we have pretty much duplicated the overall range of where we were in balance and will continue to look upwards. So we do have a price target of roughly about 320 before the end of the year that may or may not be reached before the bears step in to look to lock in profits and kind of do a little bit of a window dressing from a calendar year perspective. So we'll watch that. But still, we are in a very, very bullish trend that goes back multi years. And as stated, we have reached our 26th all-time high just in this calendar year. We still see higher highs and higher lows that continue to showcase a very strong bullish movement. As we switch over to the weekly chart, you could see it very much in more detail on how aggressive this move has been going back since October, where we've had very consistent higher highs and higher lows, but at the same time, very significant distance away from our moving averages. This first line here is our 9-period moving average, and this teal line is our 20-period moving average on the weekly. So we see we have a very large distance between that two, which quite frankly increases the probability of a larger sell-off when the sell-off does come. However, there is not a clear indication that will come. Now, that may come over the next few weeks as a lot of U.S. political activities begin to go into a second phase, as well as additional discussions between U.S. and China going back and forth. So we do want to kind of be aware of the possibility of a pretty aggressive sell-off when it does come, but there are no clear indications as of yet that we do see that. And we do kind of have a price target of roughly about 320 as an opportunity for us to look to kind of delever. Now, that may come over the next few weeks or just after the first of the year. It is a relatively round number and pretty aggressive movement towards that, and I do believe we will do some type of measured move from coming out of balance, as we stated on the monthly chart, and look to try to duplicate this, and that would probably bring us somewhere up into this range. That's how we identified the $320 mark. So we'll continue to watch it as we look to expand our range outside of value, closing out this past week with a high of 315.48 and a close just short of that at 314, significantly higher than our overall value area, which is coming in roughly about 303. So we'll continue to watch this as the S&P continues to have very strong momentum, as we have reached all-time historical levels over week over week. So we'll jump ahead to our Nasdaq, triple Qs, and we'll move back to our monthly chart to take a look exactly what's taking place there. Additionally, pretty aggressive movements that we've seen in the Nasdaq this past month, as well as breaking out of its consolidation range of multi-months here that we can kind of see. I'll draw a little square to make it easier. To be able to see exactly where we have broken out, and there are opportunities for us to take advantage of this with some type of visual reference where we will see some type of measured move to kind of a breakout. So we've identified a couple of alerts where we could see some retracement back into range, but we have seen pretty aggressive movement above this longer term trend line going back into the Q4 of last year that it was just recently broken. Now we do see the opportunity, and it's kind of come to fruition, kind of that traditional ABC type pattern where you have some movement upward, downward, and then pushing above all-time highs. And we do continue to see this happening, but there is that probability, and it gets higher as we move away from value one, but then also from our moving averages, very similar to what we did see on the S&P 500. So we do want to kind of be cautious, but if we are in long-term positions and we do not have anything open currently in the Nasdaq, and we're relatively flat across all our portfolios as we close out the year, we've had a pretty good year, but at the same time, we do want to look for opportunities to kind of come in and take advantage if the bears do step in and out-wrestle, so to speak, our bulls. Now, again, very similar to the S&P 500, we are pretty significantly greater than our overall moving averages, and we have seen consistent higher highs and higher lows, very aggressive movements, which potentially could cause us to have a pretty larger sell-off if we do come into that area, both driven by news or some macroeconomic engagements between the U.S. and China. So as we look at our monthly chart, we do have some identified. If we do break out above 207, we'll continue to take another long. If we do fail coming into the front side of this week and drop below the 205 level, this could be an opportunity for us to take advantage of a quick short movement back down to this overall trend line that was just recently breached, to see if that can show some type of support for us moving forward. So we'll continue to take advantage of this Thanksgiving rally, so to speak. It's been very aggressive, and we do see shorter term traders that are in full control, and we have not seen the larger institutions step in a number of weeks. As you can see here, just on the Nasdaq, we've had a multitude of weeks where we have not had any type of bearish movement. So the bears have just been sitting on the sidelines and getting really frustrated given the aggressive movements upward. So will they be rewarded toward the latter part of the year? We'll just have to wait and see. We'll move on to the Russell, who's seen some very dramatic movements coming out of multi-year of nothingness. Pretty much the majority of 2019, we have been in a very small trading range within the Russell and just recently broke out. Now, if we use that same logic, that puts us directly closer to our all-time high. So as the S&P has seen all-time highs, the Nasdaq has seen all-time highs, the Dow has seen all-time highs, the Russell has been a very consistent laggard, but we do see this opportunity where she will step into out of range and potentially testing these all-time highs up roughly about 173.40 with a measured move target. So the key thing to keep in mind is if you do see any type of equity or any type of ETF or future that has a very tight trading range, there is momentum that's built up in there. Think of it as a coil or a spring where energy is just kind of consolidated. And once it does break out of that range, which we did see here in this past month, and we'll see it even clearer on the weekly chart, you do anticipate some type of movement kind of from a measure move perspective, and that does put us as a projection to test our all-time highs. Now, if we do pretty large range coming from 160 up to roughly 174, I don't anticipate that happening just within December, but going into next year, or right after the first of the year, we do anticipate some type of particular sell-off to kind of lock in those profits. So we'll watch that on the monthly chart. If we step in now to the weekly, you can see this very significant trading range over the majority of the year just coming out a little bit clearer visually. And it's been roughly attached to our value area high and our value area low levels. So individuals have just been selling at the top and buying at the bottom, and it's worked out for them from a probability perspective. And now that we've seen this most recent breakout, we do anticipate continued movement upward to try to retest all-time highs. And we do feel that this is a positive aspect for overall U.S. economy, as the Russell 2000 is based upon all U.S. stocks, right? So there are some opportunities, but we do again see an extension of range that is so far greater than our moving averages. And I think that is a potential for a very violent sell-off at some point. Now, when is that point? It's your guess is just as good as mine. However, we do want to be cautious, but still being able to take advantage of momentum as it moves forward. So we want to wait for a clear indication that there is some type of sell-off that will come and pull us back into range. But as we continue to close out the year, I do want to take a moment to say thank you. I'm very grateful for all of our clients, all of our followers, and for you providing feedback. As investors, our whole goal is to help you understand the markets just that much more and be able to help come up with different hypotheses on direction of movement to kind of create longer term wealth, as well as some short term opportunities to generate profit. Now, the backdrop of this year has been heavily weighted on U.S.-China relations, and every week we typically start off with that prevailing topic. Now, as we get closer to the end of the year, we have seen some very, very aggressive movements in price. Just this past month, we've seen the S&P 500 increase roughly 3%, and across the board, the Russell and the Nasdaq are roughly about 3% growth just in this month alone. So we do continue to see opportunities for the larger institutions to come in at some point and look to take on some, to de-risk, as well as to lock in some profits as we close out the year. But it's been a very aggressive year, one of the strongest years of the overall market, where the S&P has increased roughly 25% just this year alone, and the Nasdaq as a leader of roughly about 30% throughout this year. So very aggressive for 2019, which is a showcase of the strong U.S. economy, but is that beginning to slow down? We'll take a look at some of the employment numbers coming out toward the latter part of this week, which will be that clear indication for us. But we do want to make sure that we're doing the right thing and not being able to lose any type of profits that we've gained over this past year. So we'll leave it at that. As with always, we thank you and happy holidays to everyone. And I hope everyone in the U.S. had a very safe and relaxful and turkey-driven Thanksgiving. As with always, it's your money and it's under your control. Take care.